And welcome, it's Mary Ellen McGonagle with your weekly Edge show for Friday, January 24th. First up, Happy New Year to everyone out there. I did want to go ahead and share with you what took place in the broader markets this week. We certainly did come under some selling pressure. We'll get into that as well as where the pressure was the strongest, and also some of the headline news that drove price action last week. And last up is viewer question of the week, and it was all about how one can potentially take advantage of the move into the more value-oriented stocks that is shaping up. First up, on that news front, we did see the markets pull back, and it was mostly amid weakness in growth stocks. We'll get into that further. Also, the Federal Reserve did release the minutes from their most recent meeting, and the notes confirmed that additional rate hikes are off the table. This certainly is good news, but of course investors are now worried as to when we may begin to see rate hikes. The debate is on. Also, we did get employment data in December. First up on Wednesday was private employment data, and it did show that the labor market was still strong, and that did contribute to some of the weakness that we saw. But today, on Friday, the U.S. jobs data was mixed, but mostly showed that hiring has been not as strong as anticipated and certainly very focused, not widespread. So pretty good news there. Also, next week, you want to be aware that key inflation data by way of core CPI and PPI will be released next week. And equally important is the fact that earnings season, Q4 earnings reports will begin to be released next week. Most notably, bank stocks are going to be dominating that economic or certainly earnings calendar. So from here, let's go ahead and take a look. Where did the markets close for the week? And here we are with a daily price chart of the S&P 500. Most notably, we did see a pullback of about 1.5% in the S&P 500. And you can see that we closed just below this key 21-day simple moving average. Not overly concerning from my work, and as we move through today's show, I'll share with you why. But of note too is that this RSI did fall, but we are above that 50 level, so it indicates it remains in positive territory. We did exhibit or see the MACD exhibit a negative crossover with that black line down through the red. We have seen that take place in other time periods, and it was not overly concerning. It's when that RSI turns negative that you want to begin to be cautious. So from here, let's go ahead and take a look at the NASDAQ, and it certainly did get hit quite a bit harder, down 2.5% for the week. And you can see that the decline did push this index down below its key 21-day simple moving average, and it actually was down 3% for the week. And we now have a negative RSI posted as it is below that 50. We also did see this black line down through the red on that MACD, having a negative crossover. So a little more cautious here, primarily because we got relatively higher volume than average, which can indicate distribution and foreshadow further downside price action. And again, pointing to the fact that we are seeing more weakness than not in these areas of growth as we head into the new year. Let's go ahead and take a look at the 11 underlying sectors within the S&P 500. We're looking at a 2-month daily price chart view, and I've gone ahead and added this RSI and sorted the sectors in descending order. First up here, we can see healthcare remaining up here at the forefront, up 2% relative to the S&P, down 1.5%. A lot of that gain did take shape on Tuesday. However, the sharp gain was retained with this index or sector being the top performer for the week. And I'll share with you a couple of areas within healthcare that are holding in well as one individual stock that will key in and tie with that question of the week about this move into value stocks, healthcare being among them. Now, we can take a look from here at financials. This is another area that relatively outperformed, holding in quite nicely. I did also mention that earnings season will begin next week. And again, that economic calendar is dominated by these large cap bank stocks that will be releasing their numbers, and oftentimes it can set the tone for the remainder of earnings. So we'll be on the lookout for that toward the end of next week. As we move through, we can see utilities and staples certainly viewed as a more defensive area, but also of note is the fact that these sectors underperformed by a wide margin last year. So that is part of that potential rotation away from those big performing growth areas into these underperforming areas of the market. Moving through this sector view, I did want to share with you this view of technology XLK, which had been up at the forefront for a good part of last year as far as being an outperformer, and it was down 4.2% this past week. Certainly notable within that was a big, almost 6% drop in Apple, but there were other areas in technology that were under selling pressure as well. I'll share with you that as we move through. We can see from here we have now a negative RSI, and then we already had that somewhat negative MACD black line down through the red crossover that was more pronounced this week, and heavy volume on the selling. So those of you that are overweighted in technology, you will want to keep an eye not only on this sector view, but the two industry groups that I view very important in this next segment. So from here, let's go ahead and take a look at those ETFs that certainly from my work are very instrumental in helping you get in front of where those stronger areas are in the markets relative to where money is flowing away from. So as we take a look at the 2-month daily price chart view of these ETFs, of note here again at the forefront and exhibiting strength are biotechnology stocks. I'm using IBB, the NASDAQ Biotech ETF, and the group was up slightly, certainly relative to a negative broader market, and holding support here above that 10-day simple moving average. If you do own biotech, certainly be aware that we are on the cusp of a potential black line down through the red, not a sell signal, but certainly noting that if we do get that crossover, we very likely could at least see a pause of that uptrend. Next up here at the forefront among these stronger ETFs is another healthcare area. This is iShares Medical Devices ETF, and the group was down 1%, but less than selling elsewhere. Of note too is the RSI remains up here above 50. We can see that black line down through the red, and that did in fact foretell this pullback to the 21-day simple moving average. The group remains in an uptrend. Also up here at the forefront, KRE, this is the regional banking ETF. I mentioned that a number of banks will be reporting next week, and the fact that the area, the sector, as well as this industry group are remaining generally in an uptrend with a positive RSI at this time is constructive. Of course, we will know more by the end of next week when these earnings reports are released and how investors respond. Also of note, we did see small cap stocks suffer down 3.5% coming out of an RSI with an overbought condition. However, it did stay above that 50. So despite this significant 3.5% sell-off, we are potentially still with positive momentum with that RSI. If we do get that RSI below 50, use historical precedents as your guide. And from here, we can then use this August period with that RSI getting down below that 50 for telling further weakness. One other area that certainly is of note is the yield on that 10-year Treasury. Very notable that we did see that 10-year yield rise last week and close just at that 4% level. And 4% going back historically has been rather critical and a psychological level for investors. So of note is that we did hit that last week. We'll see, because higher interest rates are a negative, at the very least for growth stocks as well as other areas. Moving through, I talked about technology coming under pressure. We can see here with this view of semiconductor stocks, SOXX, the group was down almost 6%, and we did break below this 21-day simple moving average. Certainly was due a bit of a pullback, but it's an area that at this point in time has not recovered its uptrend, and I will be keeping a close eye on that to see if we can retain upside and regain upside momentum for this particular industry group. Also negative and in the lowest quartile is another area in technology, and that is software stocks. I use ETF IGV. The group was down almost 4.5%. Pretty high volume here on the selling, with a break below this 21-day simple moving average. As you can see, this green 10-day moving average is poised to close below that 21, and we can see historically that that can precede further downside. So this is another area that, of course, from my work with mostly growth stocks, I'm keeping a very close eye on this. And you too can do that by subscribing or taking a trial of my twice weekly MEM Edge report. Now, from here, I did want to answer the viewer question of the week. And first up, what we can do is take a look at two different groupings by way of using Vanguard's ETFs. First up is VTV, and this is the Vanguard Value Fund, and you can see how it held in really quite well. Positive momentum indicators above that 10-day simple moving average, and certainly in comparison to VUG, which is the Vanguard Growth Fund, and it's more than exemplifying what I did just share with you as it relates to areas coming under selling pressure and those that are remaining positive. So from here, let's go ahead and take a look at one of the top holdings in VTV, that value fund, and that is Berkshire Hathaway. And for stockcharts.com, it's BRK/B. And you can see we had this nice double bottom formation with a low posted at the beginning of December and then a higher low at the beginning of this year. From there, we did on Wednesday experience a nice base breakout that was retained. So this would certainly be one prime example of a value stock that you may want to consider to counterbalance some of the more deteriorating growth stocks. Another top holding of that VTV ETF is Eli Lilly, LLY, and let's take a look. You can see that this week, also on Wednesday, we had, in this case, a gap up, and then subsequently on Thursday, a base breakout in Eli Lilly that was generally retained. From my work, another notable activity or action that took place is the fact that this MACD just now entered into positive territory. Good news when it is coupled with that nice 2-month base breakout here that took place on relatively high volume. And then last up, we can see that the RSI on the daily chart of Eli Lilly is also in positive territory and heading higher. That's it for this week. Everyone, I hope you have a fantastic weekend. I'll look for you here again next Friday afternoon.